Good morning, everybody. This is Tyler, and we're getting ready to do some morning analysis. And I cleared my chart of drawings because I wanted to sort of get a fresh start here. And yesterday was an interesting day, and overnight's been interesting because we had the consumer price index come out yesterday morning. That, of course, brought some volatility into the market. But to be perfectly honest, not as much volatility as I sort of thought we were going to get. So let's just take a look at what the market's been doing, and we'll go from there. So I'm going to draw out some fresh channels for us. This is sort of my big picture. I start usually with the 8-hour when I'm doing futures. So this kind of went something like this. You might count it here, but so we had this low to this high, and this was sort of like the end of the rally right here. And then we had this like another attempt, and then kind of fade back down, and then another spike up, and just hard rejection off those new highs. And then we've kind of been up here again, and just sort of trying, but struggling to get past this. And kind of here we are again. So we've got still like our previous all-time high that we probably want to be aware of, right about here. So we definitely want to know where that is, okay? And then let's start drawing off some other zones for where we are. We had, let's go down a little bit to a 4-hour as we were really climbing up here. I'm just going to sort of map this out, and I'll be moving these along, but we had this sort of swing from here to here, and that kind of lined right up with the top of the larger time frame channel. And that has kind of stayed relevant. The top of that channel has stayed really relevant. You can see it's acting as support. And then after that, we made this another low here that brought us up to this high. And we can see that this, again, sort of brought us, kind of held this high, and then we broke above it, and then that acted as support again. So we had these little attempts to push up. And the reason I kept this high here is because these attempts were really rejections, right? These weren't convincing new highs. So this one was still like the most convincing fresh high. So I like to keep that as my point of reference. And that way it like helps me to remember that these were really attempts to push higher that failed. I think that's important information to know when the market attempts to do something but fails. And that's kind of what I'm a little concerned about right here. We attempt this new high and are kind of failing right now. I'm not convinced that we're going to fail hard like we did over here or even like we did here, but the fact that we got that news, I kind of felt like the markets all week were waiting for that consumer price index. I mean, we were sideways for like 4 or 5 days. And then I was expecting after that news release for us to like kind of convincingly get out of this range one way or the other. I mean, really, we've been sideways on the S&Ps since mid-April. If you look at the NASDAQ, it's actually been since like February. And, I just was kind of hoping that we would do something a little more convincing. We'd been in this really tight range up here for about 4 or 5 days, but this broader range across this whole thing we had been in for weeks. And when we started to build all this value up here towards the upper end of that, it was kind of making me feel like we could really be getting ready for a breakout. And the good thing is that this, we do have enough value here. We're showing that there's support, right? There's enough action here to kind of hold the market up. So that's kind of what I'm looking at. Now, one thing that I like to do, I did this yesterday, and I'll do it again here today for you guys, is I like to put on our session volume profile. I don't know why almost every day it makes me re-add this thing. I use the session volume HD here on TradingView. And let's zoom down to like a 5-minute chart. We'll get some quick levels on here because there's not a lot to like note on otherwise price action. I mean, it's just been choppy, choppy, chop for 1, 2, 3, 4, 5 days now. And now it looks like we're heading into the 6th day. So One thing we want to be aware of right off the bat, all of the overnight price action so far is entirely within yesterday's value, right? The value area of the profile, the brighter area, represents 70% of the trading that took place. So these are really good levels to know about. So I like to mark off the top of yesterday's value area and the bottom of yesterday's value area. I think it's helpful. And actually, I'm going to mark these a different color. This just helps me to know what I'm looking at. Just do like this lighter purple. And then I like to know where yesterday's point of control was, the highest volume traded yesterday, which was right at basically that previous all-time high level, was what ended up being the point of control, so most volume traded. Now, I like to do this oftentimes. I'll go 2 days back. So we've got yesterday's levels, and then let's also mark off the previous day. So that's about our value area high there. Sometimes these things overlap quite a bit. Value area low, point of control. And this gives us some decent starting points for kind of having some support and resistance levels. So we can see how this sort of worked even yesterday. So this was the value area from yesterday, and we got a little stalling there. Let's see, this one here actually was the previous days. And actually, you know what actually happened yesterday too, which was interesting. When we retraced back, we went almost exactly to the pre-market point of control from yesterday. So this was interesting too. If we looked at like just the pre-market stuff, see the point of control is right here, and that's exactly where we retraced to, was basically where the London session was trading. So sometimes that's helpful too, is to just mark off, to know where that is. But today's sort of pre-market point of control, so far as lining up with the point of control from 2 days ago, we already have a line there, so we're kind of good to go. But this gives us some good reference points. We can see we came up and rejected off of those levels, came down and find support on these previous levels. This was the value area high from 2 days ago, right? So it just helps us to have, these are just some quick, support and resistance areas that you can be aware of. And then the other thing that I like to be aware of is the overnight high and low, but sometimes these already line up with those pretty good. Like this lines up pretty closely with the overnight low so far, and this looks like it's going to line up pretty closely with the overnight high. So that just right off the bat gives you, from the past 2 days, you have 6 support and resistance lines, and then you also have, your current volume profile that you can be referencing as well for the value area and point of control. So right now, we had this weird gap down last night. I still don't really know why this happened, because the market ended seemingly so balanced. We were kind of right in line with previous day's point of control. Everything was really, really balanced here, and we were basically just coiling around this day's point of control. So it didn't really look like the market was looking to make a dramatic move, and then we had this weird gap down, and then we kind of came up and filled the gap so far in pre-market, and then we kind of just have to wait and see what we're going to do from here. Are we going to fill the gap and then kind of keep grinding up and really rally now that we've made some new highs? Or is this another new high rejection, and then just basically coming back up to the area of demand here, and then, again, gap fill, and then are we going to reject down again? So I don't have a bias today. Right now, I'm very neutral. And what we have to be aware of is that, even though we had that nice volatility yesterday after the news announcement, if we just look at, let's look at before yesterday, right? Just this sideways range that we were in. So see our value. Let me just highlight this. This is the value area before yesterday occurred. And then we made this really nice, oh yay, new highs, right? But how much has value actually changed? That's really what we want to be more aware of, is how much has value actually changed. And if we look at it, value went unchanged. In fact, we actually built a little bit more value down low, down here in the pre-market. but the upper end of our value zone is exactly the same. So while price tells us there was a spike up, value is yet to change. And until we start pushing value upward, then I think we need to be, just aware of what's going on here. And kind of as long as that happens, we're going to, I think, continue just reverting to the mean. That's all we've been doing, right? Spike up, revert to the mean. Spike down, revert to the mean. Spike down, revert to the mean. Spike up, revert to the mean. That's all we're doing here. So yesterday seemed really bullish, but we're still just kind of neutral. Like nothing really changed after yesterday. So, and then again, just to point out, I'll put this back up for a second, and this is often can help you just have a bias. When we open up inside of yesterday's value area, like our entire range especially is inside of it, and the opening at the opening bell is inside of the value area, that's often a sign that we're going to continue just balancing. We're having an inside day. So if we break out of yesterday's value, then I think we can start to look for more of a trending day. But I think as long as we're still inside of yesterday's value area, then yeah, and really we're inside. I mean, we're still above the low of the value from 2 days ago. I mean, you could just see like value just hasn't changed, right? Like value inside, a little bit higher but overlapping, basically inside, again higher but overlapping, and then just back inside again. So just not a very strong bull market, until we can break out of all of this stuff. And when we do, if we can definitively break out of all this stuff, then I think we're going to have some strong moves one way or the other. And I was really expecting that to happen yesterday, to be perfectly honest with you. I was really expecting us to have a much stronger reaction yesterday, because I just felt like, I guess it's just because I thought that the tight range that we had been in this whole time, right? Again, 1, 2, 3, 4 days, and then 5 days with yesterday. I really had thought that was sort of just waiting on that news, and that once we get a breakout after that. So we got to get past all this stuff, and we really up or down. So I've mentioned the past few days, I have a hedge on NASDAQ, and I'm still holding that. The NASDAQ chart right now, my stop might get hit this morning. See, NASDAQ didn't gap down the way S&P did after the close yesterday. I'm not really sure why the S&Ps had that weird gap. NASDAQ held, and my stop is like right here. So I might get stopped at the open today, depending. It was like right above all these highs on the SQ, it's the equivalent of being above these highs. It's on SQQQ, so it's below the lows there. But we can also see that the NASDAQ, unlike the S&P, is not yet making new all-time highs. Let's go to the chart. We can actually see it. So previous all-time high is over here. We're close. We've still got a bit of resistance to deal with. This resistance isn't as strong. This was the strongest resistance, the stuff that we got through yesterday. So I think the NASDAQ looks good. I debated closing my hedge, yesterday, but just, again, we kind of rallied and stalled. So I decided to just keep the stop in place and leave it. But what I did do was I added to my long-term long positions. I have some index positions for my long-term. So I'm short and long at the same time, right? And that kind of positions me to take advantage of whatever. I have like a short-term bearish position, and then longer-term bullish positions is basically how I'm playing the market right now. And the bearish position's a hedge, so I'm okay if it loses, because that's kind of the point. The point is that we expect the market to be bullish, but there's sort of like this just-in-case kind of thing, and that's what a hedge is really for, It represents only 10% of my exposure, so I'm 90% long exposure right now, and I just have this 10% short exposure, just because we were pushing the upper ends of this, and we had all this resistance on the NASDAQ to deal with. So we'll see how that plays out. I'm going to hold that until it hits the stop, I guess, but I wouldn't be surprised if it hits the stop today, and I'm okay with that, because that also means that the long positions I added yesterday are going to be doing good, and I have more of those. So the nice thing about hedging is it allows you to not really care if the market goes up or down. You just take advantage and close out the positions that are in profit, Okay, that's it for today. I'm going to get ready to day trade and hopefully end the week nice and green.